Sydney property prices are forecast to boom next financial year, with houses rocketing by up to 9%. That's despite high interest rates and the fear of more hikes to come, with the pressure coming from overseas.
2 bedrooms, 200 square metres in Marrickville, expecting $1.4 million as the market goes from slump to jump.
A home like this would generally be guiding about $100,000 more than it would have in the later end of last year.
Despite rate rises, prices buyers are willing to pay.
There's not much on offer at the moment, so buyers have to compete a little bit more for good quality homes.
As a new forecast predicts up to 2% growth in Melbourne house prices, 4% for Brisbane, but surging between 6 and 9% in Sydney, up to 5% for units.
But there is something else that trumps interest rates, and that's population growth. And we've got population growth roaring back through net overseas migration. And Sydney takes the lion's share.
And with the construction industry struggling with increased costs, slowing new builds, growing pressure for properties could see the median house price soar to a new record.
And it's going to hit just above $1.6 million.
What's also on the rise is Sydney's standing in the world in the latest list of the most livable cities. After last year's list saw Melbourne drop to number 10, Sydney to a lowly 13, this year the Aussies muscled in at 3 and 4, squeezing out the Canadians and the Swiss.
We dropped in this particular benchmark as a result of COVID. We're back, baby.
But warnings the benefits of livable are at risk from unaffordable.
If we're trying to attract startups, entrepreneurs that maybe can't afford that expensive housing that we currently have in Sydney, we're going to start to see our reputation drop precipitously.
And Paul Caddack is with me now. Paul, higher property prices could also mean higher interest rates.
Well, Mark, we know the Reserve Bank Governor has taken notice of housing supply not keeping up with population growth and what that's doing with prices. Any price increase, of course, is good for people selling, but economists say the RBA will be watching to see if that extra wealth is adding to inflation. And if so, that could either lead to further rate hikes or delay eventual rate cuts, which at the moment the market is predicting for the first half of next year.
OK, Paul.